All right, let's chat inflation expectations. And over the past 3 months, it has increased considerably, of course, mostly from speculation over when the Fed will raise rates. Will they maintain, of course, it's 2024. But our next guest says full-blown inflation is not a part of his base case, saying 30 years worth of trends just doesn't reverse as quickly as the market wants it to. Well, for more, Paul Ashworth joining us now from Cameron Harrison in Melbourne. Paul, a very good morning to you.
Good morning. Good morning.
Right.
30 years of technology is not going to be unwound in 12 months. Is that what you're suggesting?
Yes, yeah, those secular stagnation trends are fairly embedded, and we'll see in terms of another view that we have in terms of China through the latter part of this year and going forward, how that plays out. But I did like your comment from the new Fed governor, because that, over the course of the next 12 months in terms of inflationary expectations, is really one of our key points. We don't think that the secular stagnation of the last 30 years unwinds that quickly. However, we do think inflationary expectations have been underclubbed. And a lot of that underclubbing has come from the Federal Reserve in terms of its own official data. When we've come to have a look at inflationary expectations, particularly in the US, on a broader range of data sets, we see those inflationary expectations over the course of this year getting pretty close to the Fed's own target of 2%. And that's something for markets to really have a good, long, hard think about.
All right, well, speaking of which then, certainly as far as equities are concerned, what's your expectation then with that inflation equation in mind as to where US equities are going at the moment?
Well, we think and you can see it in terms of those data points that you spoke about just before, we think this is a good story for earnings. And we think that's a good story for particularly US equities, that are well exposed to the cycle and well exposed, to leverage upside to that cycle. Businesses, that we invest in, the Carlyle group of companies, a big, diverse set of industrial businesses, very well engaged in terms of technology, productivity improvement. Home Depot, one that'll be familiar to your viewers. It's those type of businesses that are really going to benefit from the cycle uplift in the US.
And we've all been watching inflation for many decades, as we were alluding to in the open. I mean, the old-fashioned stagnation inflation, whereby it was like fuel-driven or oil price-driven, for example, at least this inflation is driven by proper growth being printed as opposed to a forecast. So that still has to be better for valuations going forward, that this is good inflation as opposed to the bad old days.
Yeah, what you just said is exactly right. It's to think about it in terms of reflation of earnings for industrial businesses, and that is broadly good for the economy. It's good for the Australian economy. It's good for the UK. It's good for the US. We have certain misgivings in terms of Europe over the medium term, but even for them, coming off the COVID ravaged base that they're coming from, it'll be good for them. We've wanted some wages growth. We're getting wages growth. These are the things that we have sought. But as your previous viewer said, we do need to expect that those longer term real yields will increase, and that's broadly positive as well. But there will be some adjustments for market, particularly in the short term.
Paul, let's turn our focus locally then, as far as Australia is concerned, particularly equities, and what sort of inflation you're seeing here, I guess, particularly as far as wages growth is concerned. And then also, you've still got uncertainty as far as the vaccine rollout is as it relates to it as well.
Sure. In Australia, we are very much focused to a construction cycle. The government's again extended the home builder initiative. We've already got a lot of infrastructure build already in progress. So that's the type of inflation and wages inflation that I think we can expect over the course of the next 12 months. Probably the single largest concern that we have in terms of Australia is towards the end of this year, going through to 2022 and beyond, and that's the industrial commodity cycle and how that impacts Australia, both in terms of net exports, national income growth, because we have concern in terms of China and its cycle. The immediate data is very impressive in terms of those pickup figures. But over the medium term, we do have a great concern in terms of their industrial cycle, and we think that has some pretty significant adverse implications for Australia.
Well, while we're bumping along at this inflection point, I think we've got plenty of time to assess what's coming up next. Thank you so much for joining us, Paul Ashworth from Cameron Harrison.
Pleasure, guys. Have a good day.